All right, I'll get going with the broadcast.
Wonderful. Everyone use the chat moving forward.
Good afternoon, everybody. Just want to welcome you here, and we'll get started here in a few minutes. So if you're wondering if your system is working, hopefully it is. If you can hear me, it is.
Hello,
As you're logging on, wanted to let everybody know that we'll get started here in just a few minutes. Give everybody just a couple of minutes and we'll get started. I want to welcome everybody as you're coming in. We're going to get started here momentarily. All right, well, good Friday afternoon to everybody. It's a beautiful day, a little bit blustery, but I want to just welcome you here and get this kicked off. Many of you probably know we've been here every Friday at 2 p.m. And if this is your first time joining us, welcome. We appreciate you joining us and hope to provide a place that is reliable and consistent to come every Friday afternoon and get a synthesized report of what's currently going on as this COVID crisis kind of unfolds, and want to give you a quick preview here and then just jump right in. So first of all, I guess before that, I'd like to thank all of our sponsors and all of those who have helped us make this possible. You can see all of their logos and names showing up now. And then as we go through today, we're going to keep it pretty simple. We've got Brad Feld joining us to talk about reopening Colorado. And then we've got a conversation queued up with Sean Fox and Sherry Weiner. And we're just going to kind of have a conversation about where things are and what advice they might have for you from the banking perspective as the next round of funding becomes available, and as you're looking at how to work forward and plan forward in your business. So first up, we've got Brad Feld joining us. He's with the Innovation Response Team and has been chairing the Governor's Economic Recovery and Growth Council. And so, Brad, I just want to turn it over to you and let you jump right in. We can forward the slides, I think, 2 slides to get to where Brad's slide is, and just take it from there. Well, actually, before I give it to you, I want to just encourage everybody to use the question and answer. And let us know what questions you might have that arise as Brad gives his update. He's going to have to jump off after about this first 15 minutes, but we will definitely follow up with everyone and get question and answer answered in our follow-up. So use that question and answer, and Brad, it's all yours.
Thanks, John. Appreciate everybody having me today. I'm going to talk for about 10 minutes about some things in general. I want to create a context for certainly how I've been thinking about this and how I would encourage many to approach this COVID crisis as it unfolds in front of us over the next longer period of time. As I think Jared mentioned in one of his press conferences recently, we have a marathon in front of us, not a sprint. And the idea that we're going to suddenly have resolution and everything back to the way it was in January or February is not a reality. We have a lot of challenging things in front of us. I would start by saying that this crisis is actually an intersection of three crises. And I think it's very, very important to understand each of the three crises and how they interplay with each other. The first of the three is the health crisis, which is the disease itself. And the COVID crisis that's been kicked off by this health crisis is unprecedented. It's a level of a pandemic challenge that we have never faced before as a society, certainly while we've been alive and while we have incredible technology today in 2020. There's still immense challenges associated with the healthcare issues surrounding the disease. That health crisis has triggered an economic crisis. That is one of the most severe economic crises that any of us alive have seen. In the absence of the health crisis, it's unlikely we'd be having any sort of economic crisis. Prior to this, generally speaking, the global economy was strong. There were lots of stress points in lots of different places, which is normal for the global economy. There were plenty of inequities across all of society, both globally in the US and in Colorado. Many people working hard to try to address many of those inequities from an economic perspective. But the context of that and the backdrop was one of a pretty healthy overall economy. Obviously, today we're in a situation where we have massive stress on our economy for lots of different reasons. But the real trigger for all of that was the healthcare crisis. And that leads to a third crisis that hasn't been talked about much, but is a severe one that is emerging now that we've spent the last 4 or 5 weeks, certainly in Colorado and the US, living a very, very different way than we normally were, which is a mental health crisis. As humans, we're not used to spending 24 hours a day, 7 days a week in our homes. We're not used to having to have all of our physical social interactions mostly eliminated. There's a lot of anxiety and fear about the future from both a health perspective as well as an economic perspective. And the dynamics of how we interact with each other, what we process as information, and how we deal with each day is challenging. So these three crises are all interlinked. And it's important to recognize that, because it's not that there's some magical thing that will suddenly solve this, but instead we're dealing with a very, very complex system. And it's a system where an incredible number of things are changing in real time. From my experience, the number of new inputs that I get on a daily basis are dramatically more than I've ever had to cope with. And not just the magnitude of the inputs, but the different kind of dimensions those inputs are on, which makes it really, really hard to figure out answers to anything. And in many cases, even good hypotheses, because by the time the hypothesis is formed and a few people are, you've managed to get your arms around it, there's new data that changes sort of all of that thought process. So I think just having that frame of reference that, there are these three crises, it is a long-term phenomena that we're dealing with, and it's an incredibly complex system, is an important starting point. It's been amazing to me to see the engagement by the private sector across all of Colorado. There's a phrase I've heard a number of times in the last a couple weeks, which is Coloradans Helping Coloradans. I've lived here with my wife, Amy, for 25 years. It is awesome, and I'm incredibly proud to be part of this state and this community and the private sector, just in terms of people getting up and saying, okay, how can we help each other? This is a hard problem, and being really focused on trying to address the issue, but in a collective way. I've also been really pleased with the willingness of the public sector to work with the private sector. I think that the leadership of the state government here in Colorado has been very strong. I think the embrace of private sector approaches and private sector solutions, the ability to listen to what the issues are in the private sector and try to formulate good approaches, both at the state level, but also then at a city, county, and local level. And importantly, one of the nice things or powerful things about the way that a state like Colorado works is that there are a lot of different constituents who interact with each other continually. And to the extent that we can bring up good thoughts and good ideas, as well as identify and focus on problems that are consistent across different areas of the private sector, I think that becomes a very powerful way to communicate them, especially to the public sector where help is needed. I'll give a quick example of this, which is something that will be formally rolled out on May 5th. It's been in the news recently, which is called the Energize Colorado Gap Fund. The federal government has just signed and will be issuing a second wave of PPP loans. The first wave of PPP loans got deployed very rapidly. There was a lot of chaos around the deployment. I think it's amazing the organizations that sort of stepped up and just tried to deal with the magnitude of this as quickly and effectively as they did. But there were still a number of people, a number of small companies, a number of small businesses across the state that were left out. Sometimes they were left out because of the application process. Sometimes they didn't have a banking relationship with the 7(a) lender. Sometimes they didn't have an understanding of how to apply for the loans. Maybe they were in an industry that wasn't eligible for the loans. And these are companies that often are very, very small, sub 25 employees, maybe down to even, a sole proprietorship. And a group of us on the private side, with support from the state of Colorado, have rallied and put together a fund. It'll be a $25 to $50 million fund in the end. It'll do a lot of $10,000 type loans, so small dollars, but very, very rapid deployment that can help in very short-term ways for people that were left out of the PPP process. There are many more examples like this, but I wanted to give a tangible one of an example of private sector identifying a need, public sector responding to it really supportively, and collectively being able to execute on it really quickly. I'd also really emphasize that, like entrepreneurship and like many businesses, lots of mistakes will be made. Anybody on this call that runs a business knows that part of building a successful business is trying things. And when you try things, you make mistakes. And the key is when you make a mistake, you learn from it and you rapidly iterate and try something different. When you have success, you do more of it. And the dynamic of this rapid iteration in this crisis is critical. You go back to something I said a few minutes ago, the number of things changing on a daily basis is incredible. And as a result of this, very, very rapid change, having this iteration, continuous iteration and learning is key. One of the things that has made me happy in many of the interactions that I've had across the different initiatives I'm involved in is people are not anchoring on their one position or their one idea and holding on to it. They're putting forth, again, hypotheses, suggestions, ideas, however you want, and they're working with people around them to collect data and come up with things to deploy and implement and then learn from and continue on. So just understand that there will be lots of mistakes in this process because we're dealing with this very, very complex system across these three crises, but that's part of the process of coming up with solutions. I'd also encourage us all to try to come together and support each other. I used the phrase Coloradans helping Coloradans earlier. This is a little cliche, but we are all in this together. We are dealing with a health crisis, an economic crisis, and a mental health crisis. Everyone, no matter what their position, physical location in the state, position in business, position in the private sector, position in the public sector, family dynamics. Everyone is under immense pressure in the context of dislocation from our normal life. And if ever there was a time for people to sort of look around and say, all right, let's figure out how to solve this thing and let's work together, this is that moment. I would encourage everybody to assume good intentions and be really clear about what is and what isn't working. The feedback to me that's been the most useful is direct feedback of things that are either being asserted that are false, or being tried that are wrong, or that are simply being missed. The generalizations don't help, it's the specifics. And it's the specifics against the backdrop of assuming good intentions. And so far, even when I've been the one providing the feedback to others, when I do it in a way that's both direct but clear about what the issues are, I've been really pleased on the private sector and the public sector about what those responses are. Now, I know this call's about reopening Colorado, and so I want to end with a couple of thoughts around that. Is recognize that, as I said earlier, we're in this phase that's going to take a long time. There is no magic solution to this, where in a month or 2 months or 3 months, everything magically snaps back to normal. We're going to have many, many, many challenging things in front of us. And the key is to listen and learn and respond against the backdrop of how the pieces interact with each other. Start shifting from stay at home to safer at home from a state level has a lot of impact on the evolution of how we engage with each other. How you think about that in your own county and your own city is important, and being clear locally about what you can do to make sure that everybody around you is safe and healthy, or safe and healthy as we can be, while trying to get our economy moving again, without falling into the morass of feeling either not listened to, or overreacting in a way, in a sort of a positive sense, saying, well, okay, everything's good, don't need to worry about anything. We need to keep worrying about things. We need to keep being vigilant, and at the same time, we need to be supporting each other as we start to gradually try things and hope that we can continue to stay ahead of the crisis that we've had, not overwhelm our healthcare system, not do things in a way that cause additional dislocation in the future, but at the same time are balanced and thoughtful about the process we're going through. So again, I said I would be general about some things. I just encourage people very much to continue to recognize the stress and challenges, not only that you're under, but that everybody around you is under, and be focused on suggesting changes, trying to affect changes, actively engaging with your communities, actively engaging with organizations that you're involved in, to try to figure out solutions to this, and at the same time recognize that many of the ideas will need to iterate to get to a good place. And that's a key part of the process we're going through. So hope that helps some, and thanks for listening today.
Thank you, Brad. I appreciate that. And just again, want to remind everybody and encourage you to utilize the question and answer, even throughout the remainder of our call, as Brad's going to have to drop off here. But we will follow up on questions that we hear, and certainly appreciate that, Brad. As we move into the next portion of our call, I'd like to introduce Sherry Weiner and Sean Fox, and I'm going to, how we're going to do this is just kind of a conversation back and forth. We're going to jump from one to the other with some different questions, and just get their perspective on what small businesses should be looking at or can be looking at this moment. And so, Sherry, I want to start with you, and I'm going to ask that rather than try to make your introduction for you, I don't know too much more other than reading the screen, just like everybody else. So I'm going to ask you to just start by introducing yourself and your organization a little bit, and then maybe just give us a quick rundown on what you're seeing and hearing about this new round of stimulus. I think 3.5 as it's been referred to, and it looks like there might be as much as 30 billion that is earmarked for small lenders, community-based banks, credit unions. So anyway, if you could just introduce yourself and give us a couple of quick thoughts as an opening question, and then we'll move on to Sean for the next question.
Sure. Can you hear me okay?
I can, yes.
Okay. I haven't used my computer audio just because it seemed to be a little spotty, and I was using my phone, but today I used the computer, so I just want to make sure everything sounds okay. So just a little bit of my background. I'm the Chief Development Officer for First Southwest Bank, a little tongue-tied today, sorry about that. And my primary role with our organization is really to oversee, administer, develop all the specialized lending programs that our bank uses. We're a CDFI bank, so we're a community development financial institution, and there's only 2 of us in the whole state of Colorado. One of them is in the Denver area, and they're a Native American bank, so they primarily focus on tribal organizations. Our focus is more broad throughout the entire state of Colorado, but part of my role in development of special programs and the administration and utilization of them was to come up with the bank's PPP program as this was rolling out. And so for a small community bank, that was a pretty tall order, but I think that we met the demand and came up with the program as quickly as we could. But one thing I would say about the program is that we were provided a special allocation as a CDFI bank, and for other small community banks are also in this pot. There was a $30 billion set aside specifically for our institutions. My audio is a little hard to hear. If I can speak clearly into the microphone. Is this better? Hopefully. So our organization was provided, not our organization, but our industry, as a CDFI bank, we did get a set aside of about $30 billion that some other organizations, some other larger financial institutions are not going to have access to. And the thought process behind that was really to ensure that small community banks are able to meet the needs and the demands in their small rural communities that they're serving. So we fully expect that we're going to utilize that entire allocation. And most banks like ourselves have developed an online platform so that applicants can access that resource pretty readily through the internet. On our website specifically, we know with this exhaustion of the allocation of the funds, our bank did close off applications like most all other banks did to the general public until the real allocation of the funds occurs, which has happened now. And so we expect that the SBA is going to open up their portal on Monday, or at least that's the word we've heard from our state district office at this point. And that will then allow for introduction of new applications going forward until the funding resources have been exhausted once again. And there does seem to be a lot of pent up demand for that.
Sherry, I'm going to jump in on top of you for a second here, and having a difficult time to hearing you. So hopefully we can get that solved in a second. A couple of quick things I wanted to pull out, and that were great. I think there is the recognition that small community banks can be more responsive and more aware of their customer needs. So that is, I'm glad we're seeing that and seeing some changes in the allocations this time. Sean, I'm going to ask you to do the same thing that I started with for Sherry, and that is introduce yourself and your organization briefly, and then I also want to ask you, in addition to any thoughts that you have on the newly announced fund that Sherry was talking about will be open for applications, the portal being open on Monday, and the 30 billion that's set aside for the small lenders. Also would like to ask you to, well, I'll get into the next question next. I'll just let you take that one.
Awesome, thanks. So I'm Sean Fox. I'm the Chief Information Officer at Fowler State Bank. We're a small ag-based community bank just east of Pueblo in the southeastern part of Colorado. And then I also have an IT business, Mjolnir Technology. And so we're a managed service provider of IT services for small and medium business. So yeah, like Sherry said, it looks like the Int'l SBA site is going to open Monday morning, and the idea behind that is to give them the week up to ramp up those resources, because from an IT side of things, I know we fought it a little bit with the first round of the SBA site crashing, and with this round there are hundreds, if not thousands, of more lenders that are now prepared and ready to submit stuff, including some big players. So we use QuickBooks Online for a lot of our books for Mjolnir, and I get an email from them every day asking me to fill out my PPP information so they can submit it pretty much the second it opens. With all that pent up demand, I will be impressed if the SBA site is not crashed and down most of Monday morning. We'll see. Fingers crossed it's not. But like I said, there are so many more lenders now that are prepared to submit, which is good for small business, but it's going to be bad for the process and bad for the SBA site. So hopefully they get all their ducks in a row this weekend and we're not kind of dead in the water come Monday. But as far as kind of my perspective, to echo what Sherry said, a lot of the community banks, it's great that they've earmarked a little bit of money for us, because with these big players like Int'l and a lot of the other fintechs, I think PayPal might be in on it too. There's going to be a lot of big applications being submitted, and if the site doesn't crash, I wouldn't be surprised if that money ran out within the week. But that being said, if you did miss out on round one, then in order for round two, just make sure you kind of have all your ducks in a row. It's getting a little late in the day today, but certainly by Monday, if possible, all your payroll information, your tax information, any other relevant stuff. If you're not going with your existing bank, make sure you have like driver's license and other kind of ID type things, because I know for us, we didn't get as much demand as a lot of these others. Some of it is because a lot of our customers are a farmer with maybe not much payroll. It's just him and a couple of their family members, and not much that would show up, and some of it kind of falls through the cracks on the PPP side of things. But we've partnered with a couple other banks to take some of their workload off, and so for that, it's ones that are trusted entities, so we don't have a concern about the loan or anything, but we still have to do all the know your customer stuff, so that the driver's license or identification, all the beneficial owners, those types of things. So it's better to have all that, just in case maybe your primary bank is overwhelmed and they're partnering with someone like us or another bank that has the capacity to take up these extra applications, and so you're going to have to do maybe one or two extra steps that you wouldn't have if your own bank was able to submit the loan request.
Great. And I think we've got Sherry back by phone now as well. And so I wanted to piggyback on something that Sean said there, just regarding some of the small operators and the ag based. It's my understanding that this new round of funding includes ag and even specifically some hemp funds. Is that correct, or what do you know about that?
Yeah, so previously you could submit ag applications under the PPP program. It was the Int'l program where there was a question or eligibility where it was specifically excluded, which they've now incorporated into this new round of funding. So when those the funding allocations hit back into the Int'l program, ag borrowers will now be allowed, as well as hemp. And the SBA has allowed for hemp operators to obtain 7A loans under their SOP previously. So you would be allowed under the current rules to obtain a PPP loan. However, the only thing I would say about that is different banks do have different rules regarding loaning to those particular industries. And in fact, some do specifically exclude it, even if the SBA program allows it. So just be cognizant of that.
Excellent. Also, this would be my own guess. I don't have particular information to back this up or particular data, but as I've heard that some of the businesses in the Eastern communities were not, didn't receive funds in the first round. I wonder if generally speaking, our culture around wanting to do things on our own and be fiercely independent had small businesses in this area reluctant to jump on when they first heard about it. And so I'm wondering if maybe starting with you, Sean, and maybe even including some of your perspective as a small business owner with Mjolnir, what sort of a process can a business owner go through to decide if this is for them? And what might you say to someone who is a bit reluctant to jump into this sort of a program?
I think you're spot on there, John. I think because for a lot of us, for a lot of our customers, I think the reason the demand wasn't there is either, they maybe kind of heard about it a little bit and just thought, well, that's not me, it doesn't apply to me, or I'm not going to take a handout type of thing. And there is maybe that stigma around it, but we've just been encouraging people like, hey, at least apply for it. If you're not going to get it, you don't get it. But most of our customer base would be ones that would fit into that. I mean, we don't have many customers that are over the 500 mark. No real publicly traded ones either that would fall into that. So it's ones where there were a couple that kind of one larger rancher operator. We didn't really have to twist his arm, but it was like, hey, get us these documents. The last 2 or 3 things that we need in order to submit them. And from my perspective, the IT sector's been still really important, especially with our clients from that side, kind of saying, hey, we're sending everybody to work remotely. Can you help us with that? So we were really busy in March while that was all happening, but it was still something where, we just have a couple employees, so our request wasn't very big, and, we probably would have been fine without it, but it was something where it was nice to kind of have that insurance and that cushion, even though it wasn't like a restaurant that maybe is going to need this, or they're not going to be opening back up type of thing.
Sure. And I think it can be also noted that, we don't know what's coming next. And so if there is a way to preserve cash, then that might be something that's really important to look at as a small business owner, being able to preserve what cash you might have on hand. Sherry, I want to explore a little bit around the independent contractor, the 1099, the sole proprietors that we have, not just in this area, but all across the nation. They're a very, very important part of our economy. And yet in the funding rounds that we've seen so far, either by not being eligible until the funds were pretty much expended, or by just the check marks of the program itself, many of them found themselves excluded. And I think there's a lot of question generally about how those individuals might be able to participate this time around. So maybe from a general perspective, and then we might drill in on a couple of other things. But what's your thoughts on that?
So you bring up a good point, and I would say that is by far the most questions, concerns, confusion around the program that inquiries, calls that we did receive. And one thing that did happen was very late in the game, as you acknowledged, the SBA and the U.S. Treasury did release some additional guidance around this particular issue, although it still does appear that there's quite a significant gap for independent operators and sole proprietors. However, they did provide some additional guidance on the 17th, I believe, which was last Thursday, that really outlined specifically for sole proprietors what information if they could provide in order to determine eligibility, and for lenders specifically, information that they could collect in order to make that same assessment, which was basically that for sole proprietors, if you file a Schedule C in your personal tax return, the amount that us can utilize for determination of maximum loan amount is basically the net profit that's reported times divided by 12 times 2.5. So it's a pretty easy calculation for a sole proprietor. The other additional information that they provided was relating to LLCs and partnerships, specifically if they were an LLC that was taxed as a partnership, which basically is if you file a 1065 report and obtain a K-1, you can utilize the income that's reported as sole proprietor income in Box 14A specifically, and the banks can use that for general partnerships to calculate the maximum loan amount. But aside from that, if you have dividends or distributions, and that is how you pay yourself, there's no clear guidance around eligibility for that information as well. So I would say they really did try to address that population of business owners, sole proprietors, self-employed individuals. However, there still seems to be some gaps there in the program guidance, which we were hopeful that they would provide some additional clarification when they came out with this next round of funding, which does not appear that has occurred. So.
Yeah, and for my
your
situation,
question.
we were an LLC with K1, and so our accountant advised that it's just that K1, the annual, on your taxes divided by 12 to get the monthly, and a caveat to that, this wasn't an issue for us, but we have a couple of doctors' offices that we did some loans for. That number's capped at 100,000. So if, for example, your K1 or your wages were, for a doctor or something, you're 120,000, your maximum that you can apply for is 100,000.
Great, thank you. So I want to kind of follow that up by the question that says if there's still a significant gap that we're looking at, or if these funds get expended very, very quickly, should a small business owner be looking at, we just heard Brad mention the Energize Colorado Gap Fund. Last week, we directed people to an ongoing list. It seems like alternative funding sources are making themselves available, and specifically to try to address some of these businesses that fall through the cracks or are located in gaps of this federal funding. Would you, if I'm a small business owner, how do I make a decision about whether I should spend time pursuing this federal funding, or whether or not I should focus all of my time and energy on some of these alternative sources or a fund that's closer to home here in Colorado? And I guess both of you, I would ask to go for that. Maybe Sean, jump in first, and then Sherry after that.
Okay. Yeah, I would say focus the near-term energy on the PPP loan if you can, just because, like you said, I would anticipate those funds running out sooner since that's a national thing. And, you know, as long as you meet all the criteria and terms, that's going to be a forgivable loan. With some of these other loan funds, whether they're you know, one that Brad mentioned or some of these other, I don't anticipate. I know I've seen a couple. They were more in northern Colorado. City of Fort Collins had one, and it's going to be a really favorable loan. It was 0% interest, I think, for 6 months, and then, you know, real small payments after that. But those I don't anticipate would be a forgivable grant. Really, those are going to be ones that it's going to be more of like a loan. Even though it's low interest, you're still going to have to pay it back. Where the PPP money, as long as you do it all correctly, should be forgivable. So that's where I'd focus the near-term energies. And then, you know, if you still have the cash flow needs, then look at a lot of these other options, because there'll be little to no interest from what I'm seeing.
So just to tag on to what Sean just said, I would agree to, you know, focus as much of your time and energy on applying for the PPP program, where you can find lenders that are accepting applications. We're hearing that some banks in the state are not going to accept any additional applications, even when this new round of funding opens up. So that might prove to be a little problematic in some areas, depending on where you're located. And the other thing I would say about these other alternative funding resources, you know, not everybody fits the parameters of the PPP program, particularly if you don't have high levels of salary or wages that you're either receiving yourself from your own company or that you're paying other individuals. And some of these more alternative funding resources, or what you might call gap funding resources, might be a little more readily available, and as Sean mentioned, will definitely have more favorable terms at very low rates of interest, and longer terms than you would typically expect with a period of deferred or non-payments for the initiation of the loan. And I just would also mention, you know, the SBA has also come out with additional resources within their own programs, particularly in the 7A program, where they are offering for lenders under their normal 7A loans to allow for 6 months of deferred payments. And then the SBA is making 6 months worth of payments for an applicant on any new SBA loans that are made prior to September 27th. So that's a pretty significant resource and very favorable in terms of if you need a short-term working capital loan, depending on, you know, what other needs you might have. These terms have never had, you know, I've never heard of anything like this before. And so, you know, it can be, in some cases, even more favorable than the PPP program. So encourage folks to inquire as to whether or not their lenders normally provide 7A loans, and look into this particular program as well, because it sounds like it's a very good resource that might either supplement or be in place of a PPP loan.
Excellent. I wanted to address a question that we had in the question and answer a little bit earlier, and then kind of transition into the end of our call here. So I want to thank you guys both very much and for sharing your expertise with us all today. One of the questions that people have is, as a 1099 contractor, if you hadn't filed your taxes for 2019 yet, where did that leave you? And the live answer to that was the 2018 return is the place to start. And I know that there can be situations, you know, one of the questions is, what if that return was drastically different than what my 19 return was going to be? And I would just encourage you again in all of those situations to reach out to a bank if you're working with a bank, through this process. And then secondly, if we could advance 2 slides, I think another opportunity to explore the questions that we all have is through these other one-on-one resources that are there. So whether you're trying to figure out the PPP, whether you're trying to pivot what you're doing or make plans over the next year even, then there's some additional resources. And first we want to really encourage everyone to reach out to their local SBDC. The SBDC is really working overtime right now. They're doing excellent, and they've got some great experts and consultants that will work with you one-on-one. We've also got the COVID Financial Network that has been put together, a bunch of financial professionals that are making themselves available for some coaching and consulting, as well as the CU Leads co-venture. And all of these would be excellent places to reach out, connect with someone about your specific information, and really look to get the questions that you have answered. So again, I want to thank you so much for joining us here on Friday afternoon. We will be sending out a follow-up either later this evening or first thing tomorrow. So be looking for that. And we look forward to seeing you next week and kind of breaking down what's happened between now and then. So in the meantime, keep your head up and have a good weekend. We'll see you later.